You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again. It is another Education Wednesday, time for yet another episode of Options Bootcamp, coming at you a little bit earlier than our usual bat time. I do have to hop on a plane pretty much right after the show here, but nonetheless, you folks, get your OBC in your ear holes. We all can use a little bit of learning, a little bit of education in these wild, crazy markets. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, A, if you're not listening to the full network, what are you doing? Nearly a dozen shows waiting there for you. And then, of course, for those of you who are ready to step past the velvet rope, head on over to the Pro. You got awesome Pro, another just awesome Pro Q&A yesterday with our buddy, Mr. Vixologist. Who doesn't have questions about vol in this market? We tackled it from all angles yesterday. Trust me, if you're even remotely curious, who doesn't have questions, like I said, about vol right now? You want to check that one out. Head on over to the Pro, theoptionsinsider.com/pro. That's not enough. We had Dr. Vix in the hot seat last week. You get that one too, and all the other 100 plus that we've done, plus options oddities every week. Live streams, all kinds of goodness. Speaking of that, if you're hanging out in the Pro right now for the live, hang tight after the show. You get a fun little futures rundown. Easy for me to say. A fun little futures rundown in your ear holes before I hop onto a jet plane. And so, man, check that out. The Pro, theoptionsinsider.com/pro is the place to go to get access to all that fun. As we are joined on this special early edition, I had to pause his day drinking early, listener. So he's a little grumpy. He is the black-hatted one himself. Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir.
Hey, man, it is very, very good to be back.
All right, and it is very good to do a little bit of the old mail call. So let's get to it.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's get down to business. Let's quickly pay off some of the questions we discussed on the show last week. Last week, our actual question of the week was, quite simply, NVIDIA has been vacillating around this par strike, this 100 strike for a while. So we said, you know what? At the time we posted this a week ago, I have no idea where they're trading right now. Probably been kind of wild out there. I did check not that long after our poll, and they had fallen to $12, which was fascinating. But I digress. What are we talking about? We're talking about the NVIDIA D-SPAR puts, 100 puts. They were trading for $18 a week ago. And we said, hey, you know what? You got to hold it through expiration, the end of December. Are you buying or are you selling those puts for $18? And Dan, nearly 60% of our audience, 59.2% said, I will take that $18 off the top. And you know what? If NVIDIA drops, I will take the stock at a nice $82 per share, sir. 25% said they want to buy those puts, so they think NVIDIA's falling out of bed. And 15.8% Dan said, you know what? I'm staying the hell away from NVIDIA. Interesting to talk about this today because yet another day where the market is turning and NVIDIA is turning hard, off $8.50 to the downside, over 7%, trading right around 103 2/3. So after rallying back up to looks like about 114, close to 115, now selling right back down to the par strike. So Dan, the market keeps sucking us back down to the par strike in NVIDIA. About 60% of our audience wants to sell those puts for $18. Which way do you fall, sir?
Oh, man. I'll tell you, this is kind of a tough. Did we talk about this last week? If we talked about this last week.
Yes, we did.
Did I say that I wanted to sell them? I bet I did.
I think you did, yes.
Now
you're like, buy them all.
Yeah. I might just give the opposite answer here. Gosh, guns to my head, I'd be selling them.
What's $18 amongst friends till the end of the year, Dan? Yeah, but right now it looks kind of rough, but these are the days when you're getting paid to sell those juicy puts. But it was funny, like a few days after we talked about it, might have been right after our show last week, those puts were down to $12. Par puts, that's how much they had moved. Not exactly a high delta option, but intriguing stuff out there, listeners. I mean, the stock runs to 115, those puts are going to come in. So in that poll, listeners, in that context, you got to hold it to the end of the year regardless. So interesting stuff. We also talked about this. This is a silly one. There was a June 50, 100, 150 call fly that went up. We talked about this during Vol Views last week. So after boot camp, it just brought a smile on my face. Someone bought that, I think 50,000 times for $1.50. So we said, quite simply, it's kind of a weird one. Do you like it? And our audience kind of split. 45% said, yeah, they liked it. About 55% said, not so much. We also asked you, this was right after our show last week. So Thursday going into Friday. So you had 24 hours to go, Dan. We said at that time, the SPY straddle, the at the money straddle, expiring on Friday. So you had a full 24 hours, was trading $16. And we said, quite simply, are you a buyer or a seller of that straddle at $16 with 1 day to go, Dan? And exactly 2/3, 66.7%, said they wanted to buy that bad boy, which I do believe turned out to be the right answer. And a third said no siree. Dan, it's kind of that time where almost you say, whatever the straddle is, buy it, right?
Gosh, man. Yeah, I mean, almost. I've been looking for opportunities to buy straddles. I haven't pulled the trigger quite as much as I would like to have. I didn't pull the trigger at all, actually. There's a lot of reasons for that. One is because I'm deep in the weeds or writing my book. And so I'm not able to manage trades quite as well, but I don't know. I mean, I like getting a really nice discount, nice peace of mind when I buy straddles, and they're close, and some of them would definitely have made money, but I don't know. I'm playing it nice and tight.
$50, buy it. $200, buy it. There's no wrong answer. We were talking about this on Vol Views last week, Dan, with I think 25 minutes to go before the close. On Thursday or Friday, I forgot exactly which day. They were pricing the SPX straddle at about $45.
Oh my
so
gosh.
over $2 a minute is what they were pricing in, Dan. 20 minutes to go, listeners. If that sounds absurd to you, it is. That's a lot of juice. So yeah, that's the kind of market we're in. Speaking of which, Dan, we also asked our folks last week, are you still trading 0-day options, or are these markets just too wild for you? And Dan, nearly 80%, 77.8% said, no way, Jose. I ain't touching those with a 10-foot pole. 22.2%. So the hardest of the hardcore are diving back into the fray, Dan. They like a little 0-day in this market. What are your thoughts?
Yeah, I mean, the 0 days is one that I just haven't had the bandwidth to be trading recently, but I am not morally opposed to them. They're pretty wily, but there's a lot of juice in them, more risk, more reward. So I'm definitely not morally opposed to them.
It's not what you said before the show. You came on and said, I am morally opposed to all 0-day trading. I thought it was a weird thing to say instead of hello. You said you just pronounced that, but hey, I was like, you know what? Dan's been hitting the bottle a little early. We just kind of got to roll with the punches. So listeners, nearly 80% of you are not slinging 0 day. 20% are, roughly. Are you in the former or the latter camp? Let's get out to our questions for this week right now, Dan, because this market, once again, as we're recording it, listeners, kind of falling out of bed yet again, including, like you mentioned, NVIDIA getting taken to the woodshed, dragging the NASDAQ down. Looks like we have bounced off the lows. Actually, NASDAQ still pretty much right around its lows, off about 2.33% right now. So, yeah, interesting stuff out there. Dan, we have a couple of questions of the week right now. First off, we said to our audience, when we posted this on Monday, VIX was right around a 35. And we said, do you feel this tariff tantrum is going to continue to rock the markets through the end of the month? Quite simply, you think VIX is going to be higher or lower or kind of still around this level at the end of the month? Dan, what is your guess, and where do you think our audience is lining up?
Well, I mean, I guess it depends on how we're defining here. I mean, exactly here, no.
35. Not yet, around 35. I'll give you a point in either direction. How's that?
Wait, around 35? I mean, right now it's 31, 33, right?
Yes. So there you go. When we posted this on Monday, VIX was 35.
Oh, I got you. Well, I got a cheat now, right? I got a head start. So no, lower.
Your cunning insight never ceases to amaze, sir. And then what do you think our audience is doing? Same thing? Are they cheating as well?
I mean, I would be. I'm just playing the log normal distribution here, you know? I mean, it's a statistical advantage, so they should be if they're answering now.
Yeah, they're a bunch of cheating bastards. 63.6% Dan say lower, 22.7% say higher, 13.6% think we're going to be vacillating around 35 through the end of the month. Get in there, make your voice heard. And Dan, weirdly enough, we talked last week about selling the par puts in NVIDIA for $18. Right as we were looking at it at the beginning of this week as well, the Apple par puts, this time the 200 strike, also trading for $18. Kind of, I guess that's the par price right now for these Mag 7 names. So we said same thing. Apple's been on quite the rampage of late, Dan, rallying well north of 200, selling off below 200 recently. So we said same thing. These 200 puts, $18. Got to hold them through the end of the year. Gun to your head. Are you a buyer or a seller? Dan, which way are you going? Which way is our audience going?
Yeah, I'm a seller. I think I would guess 70% of our audience says that, give or take.
And Dan, you would be wrong. 54 actually just ticked. 54.2% want to buy them, Dan, for $18.
Oh,
and
wow.
then 45.8% want to sell them. So I guess they got a little spooked by our dalliance to the dark side last week in Apple. And they want to buy some puts. Which way you going, listeners? At Options to make your voice heard. Speaking of making your voice heard, let's get out some of the questions you folks have sent in for us. First, let's go out to a longtime listener. He's written in quite a few times over the years on a variety of shows. This is Mr. BZ Tokyo. We love our international listeners. He's got a bit of a long one. He says, was something funny going on within 10 or 15 minutes before Trump decided to pump the markets? I've been stuck in holding APA, i.e. old Apache Corp stock from the 20s. Saw it holding up before the Trump pump around 14.5 while everything was crashing again. So I started adding some more to my position and thought, why not look at some weekly options? And saw that around noontime, the April calls expiring on the 11th. So this was last week, obviously. The April 15.5 calls expiring on the 11th. About $1 out of the money, he says at the time. Expiring in 2 days, we're trading for 18 cents. And they said they were being gobbled up about 3,000 times. He said even though the OI was only about 300. So he thought that was kind of weird. So he said, so I figure someone is really stupid as this thing can't move a buck, or someone knows something about a takeover. So I thought, what the hell? I'll buy 10 of them for $180. So obviously he paid 18 cents listening. Then, of course, they go to over $1, close at $1.30. Just hoping you get a lot more of these messages about other crazy options with no volume until about 30 minutes before the president's pump. And we put down Wednesday, April 9th as Trump Pump Gate Day. Well, you know what? We have gotten a lot of inquiries like that, Mr. Tokyo. Quite a few, actually. Most of them have centered around 0 day in the S&P, because that seems to be kind of the most direct one you could look at. You get the gold star for being the first to ask about Apache. I haven't looked at Apache in a while. And you're right here. Just on the 2nd, it got up to about 21 bucks. Then it looks like you're right. You were wearing it because on the 8th, it fell to about 14 bucks, so off $7. So a rough little stint here for Apache. And then you're right. They popped on the 9th. They popped from about 14 bucks all the way to 16 3/4. So yeah, those 15 halves, they got up to about it. You're right, about $1.30 or so, which looks like that's about the price you were saying as well. And yeah, so a good little, I would not have picked Apache, but I think short answer to your question, was there skullduggery afoot? The answer is yes. The answer is always yes in these types of big governmental events. I'll give you an example. I've mentioned this before of how the information leakage works in DC. I'll mention it again because this was my first and starkest example of how much of a sieve for information DC is. It was my early days in the SPX. I was kind of just getting started, a new trader, cutting my teeth, still kind of figuring everything out. All of a sudden, it's a quiet morning, and not much is going on in the pit. All of a sudden, all the phones start lighting up. So that's your first sign. Oh, that's weird. Every phone in the pit's lighting up. And then next thing you know, that broker across the way is quoting some out of the money puts. And then that guy over there is quoting some at the money to out of the money puts. And then the next one, then the next one. Next thing you know, they're all quoting at the money or out of the money puts. That in and of itself was weird, but I was kind of new. I was like, okay, maybe this happens. I don't know. And then all of a sudden, now sooner do they quote them, they get the markets, then everyone is saying, I'll pay your offer. I will lift your offer for all of these puts. And every single broker is lifting offers for puts across the board. I was new. I thought, it just kind of struck me as odd. I thought maybe this kind of stuff happens. Spoiler alert, it does not happen. Listen, unless the shoe is about to drop and the bottom's about to fall out of the market. And spoiler alert, that's exactly what happened. It happened so quickly that by the time all the market makers sold those puts to the brokers, and then of course they couldn't execute them electronically, they had to turn around to a headset clerk and they had to signal how many futures they wanted to sell against it. In that short amount of time, the S&P futures fell at least 5, probably 10, maybe 20 handles. So they were selling futures to hedge at just apocalyptic level. A lot of guys around me took massive 6-figure hits that day, if not got blown out entirely. It turned out Robert Rubin stepped down to Treasury Secretary. That doesn't happen too often. And he did it kind of spontaneously. But strangely enough, the information got out there quite early. And next thing you know, we found out later, there was a bunch of, senators, staffers, and aides, and congressional and White House staffers, all on the other sides of those phones. Turned out they all turned into spontaneous options experts. Go figure. I was fortunate. I was just so new. It kind of struck me as so odd that I didn't hit all those bids. So I missed out on losing hundreds of thousands of dollars within my first few months or days out there in the pit. That would have been pretty bad. Probably a bad start to my career. Might have ended it prematurely. So yes, an example of how this stuff does leak. Do I have specific examples for the Trump pump? I do not yet. I mean, a lot of it was 0 day, like I mentioned. That's what everyone's focusing on. 4+ million SPX contracts going up that day. So takes a little bit of digging, but people are looking. I will look as well. Dan, what are your thoughts on specifically Apache, and B, the notion that DC is a sieve and this stuff leaks ahead of time and people were trading ahead of it?
Oh, God, man, we could do a whole episode.
And do you have any examples of getting almost run over in those scenarios?
I do have an example. So this was from probably the late 90s or early 2000s. I forget exactly when, but there was a stock, AFS, which was formerly a subsidiary of Ford Motor Company, the financial division, but they spun it off. Those Ford still own some. And so we're going into one of the 3-day weekends, Memorial Day or Labor Day, as I recall. And, one of the big trading firms, broker comes into the pit, not going to say which trading firm, brokerage firm. And the guy goes, hey, what's the market in the AFS blah, blah, blah puts? And we barely even get our bids out. And he's sold you 1,000. Okay. No, buy them. Buy 1,000. We barely got our offers out. No. It was calls, and we were selling calls. He was buying our calls. That's right. Sorry, I forgot. So then we didn't think much of it. The guy comes back. Hey, what's your market in the AFS, whatever calls? Barely get our offers out. Buy them. Okay, buys a bunch of calls. Buys thousands, tens of thousands maybe of these calls. So, okay, that's fine. I mean, I was long a bunch anyway. I basically just got down to 0 gamma and, whatever. Some guys in the pit got shorted, metric crap ton of gamma. And so 3 days later, after the weekend, they were hoping we would have forgot. Boom, AFS got taken over by another company. And the stock was up like $11. And it was a cheap stock, too. It's like a $25 stock. So, I mean, it was up huge. And, some of the guys lost like $100,000 or whatever. They just got absolutely annihilated. So the pit files a lawsuit. We wait. Turns out that it was an account out of like some island in the Caribbean. And they dug deeper. Turned out that the person on the other side was indeed an extremely prominent politician of the era. I'm not going to mention any names. But yeah, I mean, that was the case in that case. As far as this time around, I was talking to, I mean, I'm like an apolitical kind of guy. So, I mean, I have friends who are, very liberal, very conservative, and then some that are what I would consider normal, not very either. And so my friend who leans more liberal was like, oh, yeah, Trump said that all these people, got long the market right before Trump made that announcement. I'm like, well, what do you mean? First of all, how do you know that? He's like, well, yeah, he announced it on Twitter. I'm like, well, no, that's public information, So like his cronies didn't like necessarily buy on inside information. If he put it on Twitter and it takes a while for people to see the news, then it just takes a while for people to see the news. But I mean, Twitter's a public forum. But I'm not saying that didn't happen. Maybe people were buying before the Twitter post. So I don't know what happened this time, but I do know that there have been some cases where there were some bad actors, but, they just don't care.
Yeah, DC is a sieve, and they refuse to do anything about it. They refuse to, at the very least, prevent all congressmen from insider trading. That should be very basic, you would think. You can't trade on stocks that you oversee with your committee, things like that, but they don't do any of that. And yes, did information get out about this? Was Trump talking about it before he hit the tweet button? Probably. Did people probably act on it? Probably. Would not surprise me at all. Do I have the smoking gun for exactly this in Apache or others? No, I do not. Not quite yet, but I think people are digging. If there is skullduggery, it will be unearthed. Trust me. All right, let's keep rolling out here. Let's go out to Tom B., a more direct options-centric question. He wants to know, how often do you trade iron condors, and what is your most common use case? And the answer for me, and Dan, you probably have a different answer, is not that often at all. In fact, I'm trying to think the last time I traded an iron condor. Maybe I had a trade maybe kind of go against me, so I legged into an iron condor. I probably didn't initiate it at the outset. I'm hard-pressed to think of the last time. It certainly hasn't been within the last 5+ years that I can think of that I've slung an iron condor at the outset. Maybe one. It's escaping me right now. But that said, Dan, I went and looked when this question came in through our archives, and I was reminded that we did do a 2-parter, listeners, on iron condors, episode 203 and 204 from September of 2022, so about 2.5 years ago. And it was around your mastermind, Dan, which is why I know you've been doing some iron condors, because we entitled those the Mastermind Iron Condor Renaissance. So it was a 2-parter on all things iron condors inspired by your mastermind session, Mr. Dan. So I'm guessing you have a few thoughts on when you trade iron condors and what your most common use case is.
Sounds like I trade them more frequently than you. They're not like my pet strategy or anything, but I've been known to trade some. I've traded some, this year for sure. Ironically, I don't necessarily have a use case where it's like, this is my iron condor strategy, and I try and trade it. Every time I see an opportunity, I search for it. I model them out all the time. I don't do that. But I trade them when they fit. And the last time I traded one is a situation where I counsel people to, most of the time, don't do this. It just happened to be one of the times when, it makes sense to do this. It was an earnings trade, which, and I want to qualify this, listeners, you should almost never trade iron condors on earnings, except under certain situations. And this was one of those where, it was a pretty good opportunity for taking a short volatility position for earnings on this one, which sometimes they are. And normally the way I go about that, 99.9% of the time, the way I go about that is with time spreads. That's usually the best way. But the time spread just would not model out on this one for whatever reason, I forget. And I was like, man, is this an iron condor time? And it was, and I did it. I think it was because it's a very low price stock. So yeah, that was the last time I did an iron condor. It was last earnings season, I think.
There you go, listeners. While Dan was talking, I was just doing some cursory searches. There's a lot more to be done. Nearly 5 million contracts went up in SPX back on April 9th. I'm looking at a whole bunch of 5,100 calls that did trade on prices ranging from about $13 all the way up to, looks like 240 here. So a variety of ranges, a lot of them buys. Obviously, we've bought 5,100s. We closed at 5,400. Those worked out pretty well. Again, I have to go dig in and see exactly when they were initiated, if they closed them. All kinds of fun out there. But there definitely is the air. There's the smoke. Whether there's fire, listeners, remains to be seen. Let's keep rolling here. Let's go. I always like this handle. Gamma Sniper 87. I like that. I might borrow that handle, Dan. Next time you come on the show, you might have to refer to me as Gamma Sniper. What do you think? I just like that. It has a good ring to it. All right, Gamma Sniper 87. You get the handle of the week, and he wants to know, I've been listening to some of Longo's other shows. Well, we got a few of them. And been focusing in on TWIFO lately, as futures options are not really in my wheelhouse. I'm doing my best to get up to speed. What would he say are the biggest differences or obstacles for new traders looking to get started in futures options? Well, interesting. We have discussed that a few times on TWIFO, kind of good starter products and things to avoid. We've also talked about that here on this program. In fact, we did so very recently with the folks over there at Tasty, and just some of the pitfalls. Let me see if I can pull up a few examples for you. Yeah, just 3:30 from March 19th of this year. It's about a month ago. We talked about falling to the dark side of futures options, and more importantly for you, episode 265, Mr. Gamma Sniper, from November of 2023. So going back a little bit, things to watch out for when trading futures options. So we have a few of those in our archives, listeners. Those are two you should definitely check out: 265 and 330 Gamma Sniper. But that say, what would I say are the biggest differences? First off, if you're used to trading equity options, you're going to be thrown a little bit by the skew in futures options. They're just very different. You're looking at the metals, the bid is usually to the upside. You're looking at some of the ags sometimes exhibit that as well. FX can exhibit that. You're going to see a lot of products, quite simply, where all of a sudden there's a premium to the call wing and a discount to the put wing. So traditional strategies you may be used to, covered calls, look great in that environment. Protective puts also look great in that environment. It's kind of the opposite of what we see in the equities, where you're struggling to get any juice for the covered call and you're paying through the nose for the put. So strategies like collars and those types of products are far more effective and far more useful than they're going to be in your traditional equity options. So skew is one of the biggest stumbling blocks. I would have said back in the day, I would have said basic things like just opening the account. Opening a futures account was a huge pain in the butt, and it really required, separate accounts and had to allocate funds just for your futures and futures options trading. Most modern brokerages have really done a great job behind the scenes of streamlining that now. If you open a new account with a broker, chances are one of the check boxes you're going to see when you're signing up is, do you want to open a futures account? And Yes, that's pretty much all it takes. You might have to click a few more buttons, but that's really all it takes. You get some approval, and then next thing you know, you pretty much have a futures account. It's all pretty behind the scenes now. It looks like you really have one account. It's much easier just for logistical perspective for your average retail customer to even access futures options than it used to be. So I would kind of put that to the wayside now. That used to be a big impediment. These days, not as much. So it's more the way these products trade, which is entirely different. Again, a lot of them have skew to the upside. When they exhibit their volatility is different. We're used to earnings events, Fed announcements. When you're getting out into the world of futures options, the catalysts are all completely different. In energy, it could be an OPEC report. In the ags, it could be a crop report. You know, it could be all kinds of things. Depends on the complex you're looking at. So there's a lot more nuances you have to familiarize yourself with if you're going to trade these products effectively. If you're going to dive into the ags, you better learn, the planting and harvest cycle. You better learn the crop reports. That's just basic stuff you need to know just to get in there. So there's a lot more nuance you may need to familiarize yourself with. But in general, the vol and how they trade is going to be markedly different from probably what you're used to. Unless you just go in there just slinging options on the E-mini, in which case it's going to look very similar to what you're doing right now. You will get that nice 60-40 tax treatment, though, which is a nice little feather in your cap there, sir. Mr. Dan, anything?
Oh, yeah. Think about why you want to do it and whether you really want to do it. I am all for, the more you learn, the more you earn, the smarter you are, the better you're going to trade. But it's not something you have to do. But if it's something that you really want to explore, you find really interesting, please do it. But there's plenty of stuff to trade in the regular old equity options market too. So do it if you're passionate about it, because that makes you a better trader. But yeah, basically just the nuances and the contract specifications, people can get tripped up on that pretty easy. And the margin requirements of the underlying, is important to understand as well. But yeah, I don't know. I think you basically covered it all.
And of course, we all learned if it's a physically delivered contract, it can go negative, Dan. So watch out for that. That came up, oddly enough, in a conversation I was having this weekend with people who are not really market people. And they brought up crude oil going negative. So that kind of surprised me. I was like, oh, that's interesting. I didn't think that had really penetrated to the masses as deeply as it clearly did. So something else to think about. Apple stock probably not going to go negative. But a product like crude oil that needs delivery and all these other things needs to be stored, that could potentially happen. So yeah, interesting little nuances like that, listeners, that you may not expect. So again, check out those episodes I just mentioned, listeners, episode 330 and episode 265 leap to mind. There are more if you go deeper in the archives, but those are the two most recent out there. And Mr. Dan, if folks want to check out your Substack or anything else you got cooking, where should they go? What should they do?
Yeah. Please check out my Substack. Prolific on that is what some people have told me recently, but it's just Wealth Building with Options is the Substack. So you just go to wealthbuildingwithoptions.substack.com. It's all one word. I know it's long. Careful you don't fat finger something. All those words are easy to spell. Don't mess it up. But yeah, please check it out. You can get to the podcast from there too. My temporary little project that I'm doing, which is also Wealth Building with Options on your favorite podcast platform.
There you go. Check them out. Wealth Building with everyone's on the freaking Substack now. Dan is, Russell is, just had Mr. Jim Carroll on a Pro Q&A. He's on Substack now. All the options kiddos hanging out in Substack. Damn, I have to head over there. But in the meantime, go check out all that cool stuff over there on Substack, including Dan's. He's got some good stuff cooking. That's going to do it for us on this early edition of OBC this week. If you're hanging out in the Pro, stay tuned. I'll be back in a little bit with a Just the Facts Ma'am edition of the Futures Rundown. Then I have to hop on a plane to the Southern Studio. I will be beaming at you tomorrow from the Southern Studio for the option block. The Flowmaster wants to talk about these wild markets, as well as This Week in Futures Options, which we were just talking about here. Friday, of course, we are closed for the Good Friday holiday, so I know you want some vol views. Unfortunately, don't blame me, blame the market gods. So no vol views, no oddities on Friday, but back again, not on Monday. We'll be traveling back again on Tuesday on the pro side for an awesome pro Q&A for our pro members. Check it out, theoptionsinsider.com/pro. And then back again next Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.